to tell me, when do you think the banana zone starts? I kind of think we actually started. So I would say it really starts becoming obvious in the next couple of weeks.
Crypto fam, welcome back to the channel. That was Raoul telling you that the banana zone is coming very soon. He thinks it's coming over the next couple of weeks. And this was an AMA he did about a week ago. And the reason why he believes this is because of these macro indicators that he always looks at. So you can see right here, we're in macro somewhere about halfway through it. You can see that they are cut up between the years. And normally in macro summer and macro fall, Bitcoin and crypto do very well. If you look at the yellow area here and the red area here, you can see back in 2016, 2017, really good for Bitcoin. Back here in 2012, 2013, really good for Bitcoin. Same here in 2020 and 2021, really good for Bitcoin. We're about halfway through here, so he thinks we're going to see the same thing over the next year or so. Here's another one, global liquidity. It tends to run in 4-year cycles, peaking every 4 years, and he thinks that it's going to peak in June of 2025. And he's going to be talking about, in today's video, we're looking at some more clips. He's telling you what he thinks you should do right now if you are in these markets. Here's another one here, what the altcoins tend to do during these 4-year cycles. Back in 2020 and 2021, you can see that they perform very well. And then also you can see here the GMI total liquidity index, same thing, yellow and the red areas, summer and fall, tends to perform very well. So this is what Raoul thinks is happening next. He's talking about what you should be doing in today's market. So let's go ahead and check out what he has to say here.
So where are we in markets right now? We're just in the boring zone. I posted this on Twitter. The boring zone is that post-halving transition from crypto spring to crypto summer, where everything just chops around for a bit. Those of you who are overtrading, which is most of you fuckers, get chopped around. You're like, oh my God, this is the worst thing ever. The market's gone down and then it's gone back up. I don't want to chase this and I want to chase that. And oh my God, just stop doing that. I keep trying to explain. Just the don't fuck this up thesis is to not do that. It's just to own your major tokens. You've got some stuff in speculative stuff. Stop trading. Just stop trading. And you can then sit there and go to Spain for 3 weeks and not care what the market does, because over time, because of the adoption effects of the technology, you'll do well. So the boring zone finishes at some point, and then we transition to the banana zone, which is the full crypto summer and crypto fall. Yes, as you know, I've gone from being all Bitcoin to all Ethereum to all Solana. So even if I stay in cycles, asset allocation is crucial. I don't know what the next asset allocation is, so I am where I am, and I'll do the work when I decide.
And this is really interesting coming from Raoul saying, just ignore the noise, ignore the fear, just buy Bitcoin, Ethereum, and Solana and wait. It's really interesting that he's saying this a week ago, and now we're seeing over 3 trillion being wiped out from the traditional stock markets because there's fears of recessions, and some people believe we're going even lower in this market. As you can see right here, here's an indicator that somebody made, and they got the first sell signal since January of 2022, and then another huge indicator. Today's unemployment rate reading of 4.3% officially triggered the SAM rule, suggesting that we have already entered a recession. So every single time you've seen this in the past, unemployment has skyrocketed, and we haven't seen all of these lagging effects from the Federal Reserve interest rate raises, which could be a telling signal that the traditional stock market will go lower. Now, there's two sides to that. If the traditional stock market goes lower, will Bitcoin go lower with it, or will it act like gold did back in the 2008 recession? That's another argument to be had. But some people are saying, hey, when these recession fears come, you should be buying Bitcoin. Every single time people are talking about recessions, like back in February, you should have been buying Bitcoin because Bitcoin rallied pretty hard. So right now, according to these charts and Raoul, you should be buying Bitcoin, Ethereum, Solana, ignoring the noise, and just holding for the long term. In my personal opinion, I do think right now could be a nice time to hedge some cash on the sideline if you can hedge any cash on the sideline, and be prepared to buy the dip if Bitcoin does go lower. But let's go ahead and get back into what Raoul has to say about this.
Now, the other thing is, a lot of you see volumes in the ETFs, like, oh my God, they've done $18 gazillion of volume. This is the biggest thing ever. It's because they're being arbitraged. Well, that being used as the anchor for the arbitrage. So people are arbitraging the futures contract, which is why when you look at the holders of these ETFs, the biggest ones are like Millennium and all the hedge funds. Everyone's like, look, it's amazing. They're speculating in crypto. No, they're not. What they're actually doing is arbitraging the futures contract with the ETF, which acts like spot, because they can't hold spot. There's other people, and these guys don't trade the perps markets. There's other guys arbitraging the perps against the futures, perps against the spot. So there's a lot of these players who are keeping prices together. Arbitrage play a really important role. That is most of the volume. That was most of the volume in all the grayscale trusts as well. They were arbitragers. So a lot of stuff has to get unwind. So it gets messy and noisy. One of the typical examples. Hello, Nala. How are you? This is Nala, my fur daughter. She's there's no snacks for you, not yet. This is what happens a lot, even like index inclusions. When a stock comes into the S&P 500, you get a lot of these shenanigans. A lot of hedge funds pre-position for it. There's a lot of arbitrage things as the index arbitragers figure out where it changes fair value. All of that. Anyway, the main point is the point I always keep making: it's all fucking noise. It just literally doesn't matter. Is tomorrow more digital than today? Yes. Is liquidity coming? Yes. The NASDAQ is down 99.97% since 2011 versus Bitcoin. So, yeah, that trade's always going to work out. What's the point? It's all about the numerator, and crypto goes up a lot. So I don't see, it's not really going to hedge you in anything. I don't think it adds a tremendous value. But yes, it will do that. And people can do it because the ETF is now available. So, yes. But I don't think it really adds any alpha to your portfolio. I do see this way too much as an honest piece of advice. Everyone's far too focused in the minutiae. And what you're missing, you're focused on these little things, but these things are part of that thing. Focus on that thing, not this thing. Even if you've got a lot of your net worth in the trade, we've gone through in detail, as have millions of people on the platform, explained that the business cycle is the driver of asset prices. We are just picking up in the business cycle. We're early stage. So therefore, this is not the time to worry about selling out of your assets. Oh my God, are we peaking? Sure. Can you have an air pocket? Can you have a correction? Absolutely. But this is not the time.